87.77%. That's the number that should keep you up tonight. Nearly 88% of all Bitcoin activity currently consists of futures bets. That's not organic growth. That's a casino on steroids. While JPMorgan dreams of $170,000, on-chain data warns of the most dangerous bull trap in years. Bitcoin is struggling at $79,000, 37% below its all-time high, and caught in the middle? Bitcoin Cash. With the massive CashVM Layla upgrade on May 15th just around the corner, are we on the verge of the ultimate breakout, or the final flush out at $74,000? Welcome to the grid. Let's analyze the facts. The naked numbers. It's May 2026. The market is more divided than ever. Bitcoin is currently trading at around $79,000. Sounds like a lot? Maybe, but don't forget, we're coming from an all-time high of $126,700. So we're massively down. The problem isn't the price. The problem is the foundation. Look at the order books. Real spot demand, meaning people actually buying and holding real coins, is almost non-existent. Instead, leveraged traders dominate. When 87.77% of the volume consists of futures, the price doesn't move through persuasion but through liquidations. The long-term holders are starting to tremble. Those who bought in at 120K are sitting on heavy pockets. The short-term holders are just gambling. This is an unstable equilibrium, a house of cards in a neon-lit wind tunnel, the anatomy of the Q1 bull trap. Remember the first quarter of this year? It was a textbook example of a bull trap. The price briefly shot up. The crypto Twitter bubble shouted new ATH, only to be brutally sold off within 48 hours. Why does this happen? Large institutions need liquidity to close their positions. They artificially drive the price into resistance zones, triggering FOMO among retail investors, and then sell directly into their buy orders. The result, a massive price crash and thousands of liquidated long positions. To understand the story of 2026, one must understand that the market is currently controlled by smart money using dumb money as exit liquidity. To bullish camp, the $170,000 revision fairness comes first. Despite the hard numbers, there are heavyweights who are extremely optimistic. JPMorgan forecasts a target of $170,000. Bernstein sees us at $150,000. Morgan Stanley officially declares the bear market is over. Their argument? Institutional infrastructure. Bitcoin ETFs are now firmly anchored in pension fund portfolios. Large companies are increasingly using Bitcoin as a corporate treasury asset. If the Fed further loosens interest rates this summer, a new wave of liquidity could flood the market. In this scenario, the current sideways movement at $79,000 is just the calm before the storm, a technical reset before we shatter the $100,000 mark. The bearish camp reality chucks $74,000. But now for the cold shower. The bears have some damn good arguments. If spot demand doesn't return, futures can't keep the price high indefinitely. The bears' medium-term target is $74,000. Why? Because that's where massive liquidity clusters are located. The market tends to go where it hurts the most. A drop to $74,000 would shake the last of the weak hands out of the market. Without genuine buying interest on the exchanges, every pump is just another opportunity for whales to reduce their holdings. We're seeing a divergence. The price is stagnating, while the risk in the system is increasing due to high leverage. This is mathematically unstable. Bitcoin Cash, the independent catalyst. And this is where it gets interesting for us. While BTC struggles with its identity as a gold substitute, Bitcoin Cash BCH is completely repositioning itself. BCH is currently trading at around $473, but the price is secondary to what will happen on May 15, 2026, the CashVM Layla upgrade. Since the SEC and CFTC officially classified BCH as a commodity in March 2026, the regulatory fog has lifted. The Layla upgrade will make BCH a programmable global currency. We're talking about Layer 1 smart contracts, scalable, cheap, and efficient. 3 scenarios for BCH. BTC breaks out. BCH follows, correlated and driven by the upgrade, and could outperform BTC. Sideways movement. The best scenario for BCH. While BTC is boring, the market focuses on fundamental news. Layla could drive BCH upwards independently of the rest of the market. BTC crash. BCH is dragged down in the short term, but the fundamental strength provided by the commodity classification offers a firmer base than in past cycles. BTC crash. BCH will be dragged down in the short term. However, its fundamental strength stemming from its commodity classification provides a firmer base than in past cycles. Technical levels to remember. Have your charts ready. Here are the key zones. For Bitcoin BTC, support $74,000, the red line in the sand, resistance $188,000, uptrend confirmation, resistance to $112,000, the psychological hurdle, target $126,700 to ATH, retest for Bitcoin Cash BCH, support $450, strong buying area, resistance $520, the breakout trigger, midterm target $600, 800 Layla hype target $1,000 to $1,200 if CashVM adoption takes off. The coming weeks will determine the fate of the rest of the year. Are we the exit liquidity for Wall Street, or are we on the eve of a new era for peer-to-peer electronic cash? The CashVM upgrade on May 15th isn't just a software update, it's Bitcoin Cash's declaration of independence. What do you think? Will BTC crash to 74K, or will we see BCH at $600 before the upgrade? Let me know in the comments. I read every single one, and as always, this isn't financial advice. I'm just an analyst in a world of data. Stay alert, stay on the grid. Until next time.